Good afternoon, folks. Welcome to Moneycontrol.com. So, this bank in particular has given strong financial numbers in its last two quarters and is targeting double digit growth in the next quarter. To discuss more on that and to get some pre budget insights, we have with us the MD and CEO of South Indian Bank, Mr. Murali Ramakrishnan. So firstly, I would start off with your bank has had two financially healthy quarters. So, what is the outlook for the next quarter and next year?
Yeah, the outlook for this quarter, I would probably put it this way that whatever we have tried to do over the last 1.5 years has been started bearing fruits. And if you see our results as of Q4 end of last year and Q1 of this year and Q2 of this year, we have been consistently growing our asset book, and we have been also improving on our NIM and liabilities franchise is doing well for us. NR franchise is doing well for us. CASA has improved. So overall, it's been a satisfactory year till now, and I guess the trajectory will continue. And we are hoping that by March, as per my earlier given guidelines, I'm expecting asset growth to be in let's say 10 to 12% kind of double-digit growth. This is considerably good compared to the 4% growth we had registered for the year ended March 22. So that was the first full year after I did the complete restructuring. And due to COVID, etc., obviously the growth was quite low, muted. So we ended the year with 4% growth over the previous year. And for the year ending March 23, we expect to register double-digit growth. So that's as far as asset growth is concerned. CASA, we would want to aspirationally to be around 34-35%. Currently, we are at about, as of Q2 end, we are at about 34%. I would want to, given the tight liquidity situations now and given the fact that CASA and deposit growth has been little muted for the banking system as a whole, I'll be happy if I can maintain closer to 34-35% CASA for this quarter, and I would probably like to end the year with 36% of CASA. If not 36, at least 35% of CASA growth. The CASA is what I would want to end the year with. As far as NIM is concerned, currently we are at about 2.98%. This had grown from 2.6% with which I started. And I would probably aspirationally want to be at about 3.2% by the end of March. This as far as NIM is concerned. As far as net NPA is concerned, currently we are at about 2.6% as of Q2 end. I would like it to be as closer to 2% as possible by March end. This is as far as NIM is concerned, and as far as net NPA is concerned. PCR, including write-off, currently I am at about 72%. I would aspirationally want to be at about 75% by March. And excluding write-off, currently I am at about 57%. I would like to be at about 62% by March end. So these are some of the key indicators which I am monitoring. I thought I'll tell you where I am aspirationally looking at these numbers to be by end of March.
Right. So, secondly, your bank has been attempting to morph into a pan-India bank. So, concerning that, what is the status for now?
Right from the time I had taken charge of this bank, I never had Kerala as my market. I never thought that Kerala is only my market. Though distribution-wise, we are very well entrenched in Kerala. We have got 9 out of 18 regions based out of Kerala, and we have got 3 regions based out of Tamil Nadu, and we are very well entrenched in southern part of India. And here, also equally, we are well represented in North also because I have a region office across all the states in the country, be it Maharashtra, be it Gujarat, be it Delhi, be it Calcutta, Andhra Pradesh, Telangana, and Tamil Nadu, Karnataka. Tamil Nadu, I have 3 regions. Karnataka, I have a region. So I am well present across the country, of course, with a dense density of branches being more in the southern part of India. So my simple rule is quality is what I'm chasing. If I get quality transactions across the country, place doesn't really matter. So I'm looking for good quality onboarding of asset cases, and wherever it comes from, we'll be happy to onboard them. So in our journey towards diversifying our portfolio, if you ask me today, rest of South is growing quite well for us. And both rest of India and Kerala, they've been posting a decent growth. Kerala, you must look at it in the context that Kerala went through difficult times. If you had 2 successive years of flood, and then COVID hit the state, like it hit all other states. And since Kerala is predominantly of SME dominated state, clearly COVID and these continuous mishaps have really put some of the business models into question. Therefore, we are very cautiously growing our book in Kerala. And of course, I'm cautiously growing my book across the country, more so in Kerala because of the history in the recent past.
Right. So, Mr. Ramakrishnan, let me just put this straight. Do you think that the worst of NPA is behind us?
I'll put it this way. See, when I took over the bank as MD CEO, I had two issues on hand. One is to really clean up the legacy book in terms of either by going in for a recovery and upgrade or for settlement, and to control and to bring down the GNPA and to continuously improve the PCR. So this was on one side. The other side is to grow the overall book by onboarding quality asset cases. So these are the two, I would say, two main objectives which are in two different tracks. And I'm happy to say that in both these tracks, we have made a substantial progress. As far as cleaning up the legacy book is concerned, I have almost churned 55% of my total asset book with a new sourcing or existing good quality cases continuing to avail limits from us. And that journey will continue. I'll continue to churn the book with good quality cases. That has already started showing in terms of my new provisioning being substantially lower than the provisioning which I used to generally provide in every quarter. So as of Q2 end, I had added almost 33,000 crores of new book where I had a delinquency which was very, very low. My GNPA was 0.02%. Of course, it's too early to talk about with certainty that portfolio will continue to hold of that high quality. But I'm reasonably sure that if something were to go wrong, it will show up sooner than later in lending. That's been my experience. So I am pretty confident that my new book will continue to show very good quality in comparison to old book, and I'll continue to churn my old book with more and more of upgrades and recovery happening. So as far as upgrade and recovery is concerned, for the year ended 22 March, we upgraded and recovered almost 1,500 crores. And I'm hoping to replicate similar performance for this year, for the year ended March 23. That's the reason why I'm saying that my GNPA, which is currently at about 5.7, 5.68%, I would want to bring it closer to 5%. Net NPA, which is currently at 2.6%, I want to bring it closer to 2%. So this is as far as the cleaning of the old book is concerned. New book will continue to monitor the new book which is getting onboarded, and that I'm ensuring by closely monitoring it and also by doing a very tight reviews of my portfolio which is getting built.
All right. So, talking about the budget, what are your expectations for the banking sector in specific from the budget?
As far as the budget is concerned, there are 3-4 things which today, as a banker, I would probably be happy if things really move in the positive direction in these areas. One is in the area of legal remedy for the NPA cases, and therefore today, while good thing which has happened is that IBC was brought in, which actually made promoters to come on a discussion table with the lenders. Because of the fact that they can probably lose the company, which is a very, very good measure. But as it really delivered what it was supposed to deliver, I'm sure it's a journey, and we have come a long way in that journey. We are able to see traction of closure of cases happening through IBC, but still there is clearly good scope for to really say that it's indeed a major boom for cleanup of the entire bad book of the banking system. So therefore, I would want a legal system to be a little more and more proactive, more and more solution oriented, instead of letting promoters or borrowers who have refused to make payment, delaying the resolution of cases by usually one under one pretext or the other, the cases getting prolonged. for 5 years, 6 years, etc. It's not in the best interest of the economy, because at the end of the day, we are handling public money, and we need to really be ensuring that they are paid back whatever deposits they hold at the rate which you have contracted. So the earliest the resolution happening for in such cases, better will be the even the capital requirement for a bank, because they can then proceed with their business as usual. So this is on one side where I would want really legal system to be strengthened. Second thing is we are what we are clearly seeing is that there are many regulations which keep coming. Of course, in the nature of providing a lot more customer convenience, in the nature of providing ease of customers in terms of their debt burden coming down, etc. I would, while that is clearly required, because the country and the whole world went through unprecedented times in the last 2 years. But now with the way things are relatively behind us, I think we should now start looking at the whole thing from making the entire banking system also little more profitable, because if you are going to offer everything by way of convenience at a cheaper cost or without any cost, etc., finally the banks will have to spend a lot more capital, as well as a lot more capital outlay towards setting up the digital system, setting up the digital infrastructure, which costs a lot of money, especially for medium-sized and small-sized banks. Therefore, at the end of the day, there are stakeholders who are putting money, and therefore we need to ensure that their returns are also protected, in the sense that we are giving them adequate returns for which they've invested. Therefore, wherever we are able to see that the today the pricing is regulated, I think we should let the banks decide on pricing, and they should, as per the market expectations, as per the riskiness of the customer, instead of actually applying the same rule for everybody and anybody. And third thing, of course, is with the way now inflation is probably being brought under control, etc. Now we would obviously like to see that the speed at which the rates are hiked should see some moderation, and with which hopefully we should be able to see both the inflation getting drained, as at the same time the rates are conducive for economic growth to happen. While it's important to maintain the inflation at the agreed level of 4 to 6% as far as the central bank is concerned, at the same time we should also be cautious of the liquidity which is already sucked into the system, where the liquidity is today under constraint. Today we are obviously where there's a need for passing on the increase in interest rates through the deposits to the retail shareholder, only then his returns will be positive. All that will probably make the NIM of the banking system as a whole will go through a little bit of turmoil, because of the frequency with which rates are getting changed, and frequency with which we need to act on the increased rates by passing on the benefit to the customers. So if you can bring in some kind of stability in terms of making the rate increase a little more streamlined and making it balanced, and also provide adequate liquidity in the system, so that both inflation is taken care, at the same time growth is also taken care. So till now, I think central bank have done a commendable job in reining the inflation, which is the need of the hour. And now it has reached a stage where we are seeing that inflation is slowly brought under control. But going forward, I'm sure central bank will also be sensitive to the fact that liquidity today is far lower, and today banking system as a whole is for meeting their asset requirement, asset needs, etc. They need to raise more liquidity. If that is going to come at a very high cost, it's not going to be good for the banking system as a whole. So, because at the end of the day, you can't pass on everything to the borrowing customer, since his ability to repay is dependent on his salary or his business income, which hasn't really seen that much of an increase in the recent past.
So I would like to know from your end, what challenges do you think CBDC can have?
Yeah, so this is a new initiative. I think the initiative is in the right direction, because I think global field today we are moving towards digital. Therefore, we clearly need to adapt this new initiative. It has got a little bit of teething trouble. One of the things which I keep hearing, we are not part of the initial set of banks which are experimenting this. So what I get to share with you is what I got to hear from the market. The concern in the minds of the user is that whether the transaction which he is doing, whether it is being monitored or being scrutinized by anybody, that is one of the concern in the user's mind. So like any other digital transaction, when the fulfillment has to happen, the text message has to be sent for the fulfillment of the transaction. So today there is a doubt in the minds of the user as to whether the bank which is hosting it, whether they are having access to the transaction which is being done. So that is the initial apprehension. I'm sure these are all initial teething troubles which will get sorted out as we move along. But this is an initiative in the right direction. But like we need to watch closely as to how it is taking shape and how people are comfortable adapting this going forward.
Thank you. Thank you so much, Mr. Ramakrishnan, for your views and insights. To read more banking news, please go to moneycontrol.com and follow us on Facebook, Twitter, and YouTube. Thanks a lot.